Hello everyone. Today in this video we are going to see a complete demo of GST billing in Marg ERP 9+ software. We are going to see the process of sale billing, purchase billing and reverse entry, GST inward billing, GST outward billing, rate-wise GST billing, GST plus Cess billing, advanced GST receipt entry and GST returns. So let's begin. Firstly, you will go on our website margcompusoft.com and click on downloads. From the downloads page, you can update your software. This page also shows the last updated date of this EXE. Means when was this EXE last updated. If this date does not match with your software date, then you can update it from here. On the same downloads page, below you will find download patches, from where you can download GST patch, VAT patch, e-business patch, etc. Here also the last updated date is shown. Means when was this patch last updated. According to the government rules, whatever changes will take place in GST, we will update those changes in this patch and provide it to you over here, which you can simply download and paste it in your Marg software folder. You can subscribe to Marg tutorial channel on YouTube so that you can stay updated with the latest videos. There are more than 500 training and knowledgeable videos of Marg tutorials which keeps on adding with new videos from time to time. There's a separate playlist for GST on our channel, where you'll find all GST related videos at one place. From our website, you can click on GST knowledge link, where you'll find GST related information and videos. By clicking on the blog link, you can visit our blog, that is blog.margcompusoft.com. You can click on contact us link from our website and find and contact the nearest service provider from your area. As soon as you will start the software, in this way a list of companies will be displayed. You can press the F2 function key to create a new company, else you can press the F3 function key on your existing company. Then this company alteration window will appear, where you will fill your company details like GST IN number, your company type, like whether you are a registered company, an unregistered company, or do you come under composition scheme. Whatever company type you select here, that will affect your billing, accounts posting and returns process. We will see the process of each one of them one by one further in this video. In order to activate GST in Marg software, we will go on Masters, Ease of GST Adoption and enter on Activate My GST. As soon as you will enter on Activate My GST, you will find some options, where you just have to select your required option and keep pressing enter. And in this simple way, your GST will get activated. Under Ease of GST Adoption, you will find one more option, Item GST Percentage HSN Updation. Through this option, you can export a list of all the products created in your software in Excel and update some details there, such as your product's HSN code, SGST, CGST and IGST tax percentage. After filling these details, save the sheet. After saving the sheet, you can import it in Marg software. Through the same option, you can change tax percentage and HSN code in bulk. So when we enter on this option, this window appears, where a list of all your items are displayed. When we will press the F6 function key on this window, then a pop-up window will appear. Here you will select whether you want to change the tax percentage of all the items with their HSN code or not, or you just want to change the tax percentage of all the items. If we select the first option, tax percentage and HSN code, then this window will appear, where a summary of all the taxes already created in your software will be displayed. Like already 4%, 5% and 12.5% taxes are created in my software. Now if I want to change all the 4% tax items into 12% GST, so I'll simply press enter on this 4% tax line and specify the new GST rate that has been changed and specify the HSN code of that GST tax percentage. You can do the same for all the other taxes. On the same window, you can also press the F3 function key to change rates of all the items in bulk. So as soon as you will press F3, a window will appear where you will find 6 formulas, out of which you can select one, which will apply the formula on all the items and change their rates altogether. So on formula basis, you can change rates of all the items. Like if I want that from all the items, 25% gets decreased from current MRP and whatever is left becomes the new rate. So for that, I will select the third option. After selecting a particular formula, a calculation window will appear, where you can check that what will be the effect of the formula that you have selected. Like in this example, I have checked that if the MRP on an item is 100 rupees and the GST percentage is 5% on that item, so what will be the new rate according to the formula I have selected? So the software is telling me that after applying the formula, the new rate will be 105 rupees. Similarly, you can specify any MRP and GST percentage and check what will be its effect and what will be the new rate. So if you are satisfied with this formula, type sure. Then this window will appear. From the sale rate and purchase rate column, you can increase or decrease the rate. Like in this example, I have decreased the sale rate of all the 12% GST items by 20%. So that is why I have specified -20. If I had to increase the rate, I would just specify 20%. And for purchase rate, I have decreased 15%. You can do the same for other taxes also. Just like items, you can also export the list of customers in Excel through this option. So in this way, a list of customers are exported in Excel. You just have to specify the GST number of all the customers and save the sheet. Then import it in Marg software. Through this option, import HSN GST percentage from Excel, you can import an Excel sheet of the product list with GST tax and HSN code that are provided by your companies. So if your company provides you an Excel sheet of their products with HSN code, GST tax percentage, so you can import that sheet in the software. Like this is a sample sheet of a company where they have given us their product name, their GST rates and HSN code. You can map this sheet in Marg software in this way. Like in which column is the HSN code, in which column is the IGST tax, that is full tax, in which column is the MRP, etc. In whichever products you deal in with this company, you will map those products with your software's item. Then those items will get updated as per the company's Excel sheet. When you will enter on GST implementation videos option, you will be redirected to YouTube, where you will find all the GST related videos of Marg software. You need to remember one thing, that whatever transaction you do in your business, whether it's a sale transaction or a purchase transaction, sale return, inward, outward, etc., it depends upon your company sale type and your customers or suppliers company sale type, which ultimately affects your GST returns and tax credit system. We'll see the process of each one of them one by one. We'll first see the process of sale billing in Marg software. Then we'll see the process of purchase billing. Firstly, let's see what will be the sale billing and accounts posting if you are a registered company. If you are a registered company, then in your company master, under company type, registered should be selected. In order to create sale bill, you will go on transaction, sale and then enter on bill. As soon as you will enter on sale bill window, a ledgers window will appear in front of you, where you will select the ledger of the customer whose bill you are creating. As soon as you will select the ledger, this window will appear at the first time. This window appears when you have not defined the GSTIN number of the customer. Down you will find an option type, where you have 5 options. Here you will select what is the company type of this customer. Is he a registered customer or does he come under composition scheme? Is he an unregistered customer? Is he your relative or in your blood relation, or is he prohibited? If you select prohibited, you won't be able to do his billing. After filling the details of the customer, you can move ahead and make the customer's sale bill. We have made a local sale bill of a registered customer. In this bill, we have loaded 2 products, each of 5 quantity, and their rate is 100 rupees each. Suppose on Crocine item, 12% GST is charged, and on Dabur mustard oil, 5% GST is charged. Down you see the total invoice value is 1085 rupees, out of which value of goods is 1000 rupees and 85 rupees GST. If we split this to CGST and SGST, then you will see 42.50 rupees SGST is charged, and similarly 42.50 rupees CGST is charged. So basically, because you are a registered company, so you will get the tax credit of 85 rupees. So basically, when a registered company does sale to a registered, unregistered or composition scheme customer, so GST percentage is excluded in the bill and shown, like in this bill. So you will get this 85 rupees tax credit from the government. In Marg software, whatever transaction you do, its automatic voucher posting is done. Like now, we have created this bill. Let's see its automatic voucher posting. So this is the sale voucher posting. Here you can clearly see that you have received 1085 rupees from Bilal and Sons. You had loaded one 5% GST item of 500 rupees and one 12% GST item, and that was also for 500 rupees. So different posting is done of 5% GST item and 12% GST item. So in this way we saw that if you are a registered company And if you make a sale bill of registered, unregistered or composition scheme customer, so what will be its accounts posting? Now let's see what will be the sale billing effect if your company is unregistered or if it comes under composition scheme. So suppose you are an unregistered company and you are doing sale to a registered customer. So in this case also, we have made the same sale bill. We have loaded the same items at the same rate. But here you see the difference. The total invoice value is 1000 rupees because no tax has been charged here because you are an unregistered company. So even if you have specified GST tax percentage on items, but that won't be calculated during sale billing. If you are an unregistered company or if your company comes under composition scheme, so no GST will be charged and no tax credit will be received. If we see the accounts posting of this bill, so you can see this is the sale accounts posting of an unregistered company. It comes under local sales tax paid. So basically when an unregistered company or a company under composition scheme does sale to a registered, unregistered or composition scheme customer, so GST is not charged, like as we saw now. So in this way we saw sale process in Marg software. Now let's see purchase billing process. Purchase billing also depends upon your company type and your supplier's company type. Firstly, let's understand what will be the effect on purchase billing and purchase accounts posting if you are a registered company and you purchase goods from a registered supplier. If you are a registered company, then registered must be selected on the company details window. For creating purchase bill, we will go on transaction, purchase, then enter on bill. Then we will select that supplier's ledger from whom we are purchasing. If you want to view the details of this ledger, so you will press the F3 function key on this supplier. After pressing F3, the ledger details of this supplier will appear. Here you can see this is a registered supplier and our company is also registered. So when we will make a purchase bill of this registered supplier, so down here you can see the total invoice value is 1085 rupees, out of which 1000 rupees is value of goods. Means we have purchased 1000 rupees items from this supplier and total 85 rupees GST is being charged, which is excluded and shown. So basically when a registered company purchases goods from a registered supplier, then GST percentage is excluded and shown in the bill, like it is shown in this bill. So you will get a tax credit of this 85 rupees. Automatic voucher posting is done for purchase billing also. So this is the purchase voucher posting of that bill. So here you can see 1085 rupees has been credited from Manisha suppliers. We had purchased one 5% GST item for 500 rupees and purchased one 12% GST item, and that was also for 500 rupees. So separate posting has been done for 5% and 12% item. Now let's see what will be the effect on purchase billing if you are a registered company and you purchase from an unregistered supplier. So in this example, we are a registered company and the supplier is unregistered. We have made the same purchase bill. But here you can see the difference. 1000 rupees is the value of goods and no GST tax is charged because you have purchased goods from an unregistered supplier. Now we have defined GST percentage on these items. But since you are purchasing from an unregistered supplier, that is why this bill is without tax, because an unregistered company is not liable to pay tax. But in this example, we are a registered company. So let's see what happens when we save this purchase bill. As soon as we will save this bill, the software will ask us, this supplier is unregistered, want to generate self-invoice. Self-invoice is also called reverse entry. As per the government law, it's required that we click here on yes in order to generate reverse charge entry. After clicking on yes, the software will automatically generate a reverse charge entry according to the tax that you have defined on the items which you loaded in the purchase bill. Like we purchased two items, one was of 5% GST and the other was of 12% GST. So the total purchase was of 1000 rupees. But because we purchased from an unregistered supplier, that is why along with 1000 rupees purchase, one reverse charge entry is also generated. And this reverse charge amount has to be paid to the government. So if you are a registered company and when you purchase from an unregistered supplier or from a supplier under composition scheme, so that purchase will be tax free. But the items that you have purchased, according to their GST tax percentage, you will be charged GST return, which you have to pay to the government. Now let's see what will be the effect on purchase if you are an unregistered company. Like now we are an unregistered company and we are purchasing from a registered supplier. So we have made the same purchase bill, but here you see the difference. No GST has been charged, but the GST tax has been included in the value of goods, whose credit will not be received. Means whatever GST percentage you have defined on these items, they have been included in value of goods because you have purchased from a registered supplier. This is the automatic voucher posting where you can see the entry is done as tax free. Means you do not have to pay any tax and you are not getting any tax credit. Means if you are an unregistered company and you purchase goods from a registered supplier, then whatever tax will be charged on that purchase, that much tax will get included in value of goods instead of GST, and so you won't get its credit. Now let's see what will be the purchase billing effect if you are an unregistered company and you purchase from another unregistered supplier. So you are an unregistered company, the supplier is also unregistered from whom we are purchasing. Here also we have loaded the same items, but here you can see the total invoice value is 1000 rupees because neither tax has been charged here nor tax has been included in the value of goods. Because you are yourself unregistered and the supplier is also unregistered. This is the accounts posting of that bill, which comes under local purchase, tax paid. Means you do not have to pay any tax. So basically if you are an unregistered company or a company under composition scheme and you do purchase from another unregistered supplier or a supplier under composition scheme, so you are not liable to pay any tax. But if you purchase from a registered supplier, then also you are not liable to pay any tax, but the tax amount will get added in the total invoice amount, which has to be paid by you, but you won't get its tax credit. So in this way we saw the sale and purchase billing process in Marg software. During sale billing, when this window is displayed, then in type one option is shown, related. In Marg software we have given a provision of related party billing. Related parties are those parties who are related to you. Like suppose if this party is your relative or your son or wife, etc. So suppose you sell goods to your relative at a very cheap rate. Suppose a 100 rupees item at 10 rupees. But as per government law, if you do sale to your relative or any person who comes under your blood relation or is a related party, so you will have to charge tax according to the market value, even if you are selling the product to your relative for free. The difference between related party billing and billing of other parties is that if you set a party as related on this window, so software indicates you that this party is related party. Want to charge tax on market rate? If we select yes here, so as soon as you will do billing, then software will ask you tax on. Like we have defined tax on 100 rupees. But we are doing sale of 10 rupees. Means tax will be charged on 100 rupees, which is the market value. Now when we will save this bill, so you can see its effect that the value of goods is 1000 rupees and normally GST is being charged on market value. And this is the voucher posting of that transaction. This related option can also be used when you will transfer your goods to your godown or transfer goods to your own firm or your relative's firm. There is also a provision of GST inward and GST outward in Marg software. GST inward means the goods and services you purchase and GST outward means the goods and services you give or sell. GST inward works like purchase and GST outward works like sale. So firstly, let's understand the process of GST inward. Sometimes in our business we purchase such commodities that does not affect our inventory, means the commodities that we do not resell. But we do get the tax credit on the purchase of those goods. For example, when we purchase a machine for our business or a computer or purchase some services, like if we book a hotel for a business event or we get telephone bill for a shop or electricity bill. So these are some examples of GST inward, where we purchased service or commodities but we are not reselling those commodities or services. So if you want to claim GST credit for these purchases which do not affect your inventory, so that entry has to be done from GST inward. So to do GST inward entry, we will go on transaction, GST inward, then enter on inward. Then a ledgers window will appear. Suppose for a business meeting, we are booking Gayatri Hotel. So we will create a ledger of Gayatri Hotel and select it. After selecting the ledger, you will then select that under which expenses are you generating this bill. Like now we are making an inward bill of office expenses. So we will select the ledger of office expenses. After selecting office expenses, we will generate such a bill. Now suppose the HSN code of hotel services is this. So we will create an item expense, then define the HSN code of that product or service, and whatever percentage tax is charged on that item or service, that much percentage you will specify on that item name. Next time when you will purchase the service of the same HSN code, so again you can load this item in the bill. So after creating this item, so we will load this item in the bill. Now suppose the hotel bill was of 25,000 rupees. So we will select 1 in quantity and define 25,000 in purchase rate. Down here you see the GST tax percentage is also calculated. For GST inward and outward also automatic voucher posting is done. So here you can see you will get tax credit of plus 625 rupees. The expenses item that we just created, its stock will not get affected. Means the stock of this item expenses will always remain 0. Like right now, we created a separate ledger for Gayatri Hotel and created a GST inward bill against it. Similarly, you can create GST inward bill against a general ledger also. Like for example, if there are a number of salesmen in your business who visit many hotels to stay at during their field job, so instead of making separate ledgers of all the hotels where your salesmen visit, you can do the entry of those expenses in a general ledger. So basically you will make ledger of only those parties with whom you deal regularly. You don't have to make thousands of ledgers. So credit card, cash, general ledger are some of the ledgers which are common. If your salesman has done payment through cash or credit card, so you will select cash ledger or credit card ledger, otherwise general ledger. After selecting general ledger, a party detail window will appear. Here you will fill the details of the firm to whom payment has been done and then normally do its GST inward billing. So in this way your GST inward voucher will be generated. Now let's see the process of GST outward. GST outward works like sale. The difference is just that it does not affect your inventory. Like if we sell our office machine, office furniture or take rent payment from some tenant, then that will come under GST outward. So let's see how will the entry of GST outward be done. For that we will go on transaction, GST outward, then enter on outward. Firstly you will select the ledger of that customer from whom you are receiving the payment. And then you will select that which type of payment you are receiving. Like suppose we are receiving rent payment from Ahuja, so we have created a ledger of rent under income indirect accounts group. Then we will select this. Then similarly like GST inward, we will also do the billing of GST outward. So this is a rent bill which has been charged from Ahuja Medicine Center, and this is the HSN of this service. The rent is of 15,000 rupees and 750 rupees GST is being charged. If the party says that the tax has been included under 15,000 amount only, so for that you will go on the rate column and press the star key on it. Then define 15,000 on net rate. You can do the same process in GST inward also. This is the voucher entry of GST outward. We have taken total this much payment from Ahuja Medicine Center. 15,000 has been received against rent and 375 plus 375 tax has been charged from him. This much amount will be credited to you. There is a requirement through the government that suppose if any of our products sells below 1000 rupees, so the GST tax percentage will be different for that product. And if the same product or any other product sells for 1000 rupees or above, then the GST percentage charged on that product will be different. This law is applied for different types of products of different trades, like for shoes, footwear, garments, etc. So to automatically maintain rate-wise GST, Marg software has a provision. To enable this provision, you will go on Masters, Marg Setups, Control Room, and in Search and All, we will search for rate-wise GST. Here you will get an option, Rate-wise GST, where you have 7 options. According to your requirement, you can select any one of them. Means do you want to set rate-wise GST, item-wise, company-wise, commodity-wise, category-wise, etc. So for now we will select 2 for all. After selecting, in Rate and Discount Master, one option will be enabled. Rate-wise GST for all, means for all items. When we will enter on this option, then software will open a window. For example, here we have specified to the software that if there is 5% GST on any item and if we sell this 5% GST item for 500 rupees or above, so instead of 5%, 12% GST should be charged on the sale of those items as per government law. After doing such a setting, let's see what will be its billing effect. So we have loaded an item shirt in this bill which is for 400 rupees. Now because the sale rate of this shirt is below 500 rupees, that's why 2.5 plus 2.5 GST is being charged. But when we sell the same shirt for 550 rupees, then automatically 12% GST is being charged. Similarly, if you want, then you can set rate wise GST on item wise, company wise, commodity wise, etc. Now let's take an example of company wise, for which we will set this option to 4. After selecting in rate and discount master, company wise GST will get enabled. Through this window, you can set that what default GST percentage is set on which company products, and if the rate is equal to or greater than the one that you specify here, then what GST percentage should be charged. So we have specified that the default GST percentage on the products of Park Avenue is 5%. When the products of Park Avenue are sold for 1000 rupees or above that, then 12% GST should be charged. There is also a provision of Cess calculation in Marg software. To enable Cess option, go on Masters, Marg Setups, Control Room, then in Search and All, search for Cess. Here you will find an option, Surcharge Octroi GST Cess. So software is asking you how do you want to calculate Cess. We will select here I, means item wise. Then software asks if item wise asks Cess in rupees also. Like for example, there is a rule from the government on the sale of cigarettes, which is that if you sell one packet of cigarette to anyone, so you will have to charge 5% GST on it plus 2150 rupees Cess on per packet. That's why we will set here Y, so that software calculates Cess rupees wise. Then software asks you that do you want to calculate Cess on local sale, central sale, or on both. We will set here B for both, because this rule is applied for both central and local. Then software asks that on what basis should Cess be calculated, only on tax basis or on rate into quantity or on the total amount of the bill or on the gross amount of the bill, etc. We will set here B for quantity into rate. For service calculation also we will set here B. Then software asks that should Cess be calculated on post percentage wise or not. If we set here yes, then 5% Cess will be calculated in 5% and 12% Cess will be calculated in 12. After doing the Cess setup from control room, we will press escape and save the changes. After saving the setting, when you will go on the product master window, then here you will see that on this window Cess column has been added. Now for Gold Flake cigarette, we have set 5% GST and we have specified 2100 rupees as Cess. Now as we have generated a sale bill in which we have loaded one quantity of Gold Flake cigarette whose price is 2500 rupees. Down here you can see 5% GST is being charged plus Cess is also being charged. So the total of GST percentage and Cess is reflected in GST percentage field. So value of goods plus GST percentage is equal to 4850 rupees, which is the final invoice value. If we see its accounts posting, then you can see a separate posting is done for Cess account with the name surcharge on tax. In Marg software, there are a number of pre-designed invoice formats. To select invoice format, we will go on Masters, Marg Setups, then enter on Cell Format. Here you will fill the current date in reverse. Like today is 7th July 2017, so we will feed here 2017 7/7. Then you will select that whether you want to print invoice for DMP format or GUI format. Suppose we select GUI. Then you will specify a new name for the invoice format, suppose GS. After specifying the name, when you will press enter, then this window will appear, where there are a lot of pre-designed invoice format. From here you can select your desired format and press escape. Then go on default invoice formats and by default select that same invoice format which we just created. Like now we created GS invoice format, so we have set that format as default by selecting GS invoice format here. So when we will save a bill and press F key here to view print preview of the invoice, then you can see the preview of the invoice which we selected from cell format. Similarly, there are a number of invoice formats which you can select from cell format option. So in this way we saw the process of sale, purchase, GST inward and GST outward. To know about other options, you can watch our other videos on these topics. The entries that you can do from the transaction menu, you can do the same entries directly from the vouchers menu. The difference between transaction menu and voucher menu is that the entries that you do from the transaction menu is done in inventory format. But in vouchers, you can do the entries in accounting format. However, whatever entries you do in the transaction menu, automatically their accounts posting is done. But if you are an accountant and want to do entry in accounting format, then you can do the same from vouchers menu. Like sale entry, purchase entry, GST inward, GST outward, GST advance receipt, etc. So let's do a sale voucher entry and see. While doing sale entry in voucher format, this window appears, where you have to feed the bill number, select the HSN code of the items whose sale has been done. Like 2 HSN code products have been sold, on which 6 plus 6% and 2.5 plus 2.5% GST is charged. And this is the amount of the products. This is the SGST amount charged and this is the CGST amount charged. When we will save this entry, then such a voucher entry will be generated. Similarly, you can do entry of purchase, GST inward, GST outward in voucher format also. Next is GST advance receipt. This is a type of a receipt entry. Many times what happens is the customers do an advance payment. Now according to the government law, if somebody has done advance payment to you, then GST has to be deducted on that advance payment at that time itself and get it collected with the government. Later, when you will do billing of that customer, you can adjust the payment from his advance. So let's see how is the entry of this transaction done. For that, you will go on accounts, voucher entry and enter on GST advance receipt. Then select the ledger of that party from whom you are receiving the advance payment. Suppose we have received advance through check. So we will specify the check number over here. Then we have to select that HSN code against which advance payment has been received. Like maybe the customer has given you advance payment for rent or for purchases. So you will select that HSN for which most likely the advance is received. Means you will select the most expected HSN which the customer is going to purchase. Then feed the advance amount that has been received. Then when you will save these details, so such a voucher entry will be generated. In this entry you can see automatically tax has been charged. Means automatically GST on deposit account has been created and GST has been deposited in it. And an automatic reverse entry has also been done. Now when we will create a sale bill of this party and save it, then an adjustment window will appear. Now the advance amount that has been received from this party has been split between SGST and CGST. Now whatever total invoice amount has been calculated, you can adjust that amount from these advances in this way. By going on duties and taxes option, month wise you can view how much CGST has been debited, how much has been credited, and if you have done central sale or purchase, then how much IGST has been debited or credited. You can further press enter on these and view the details tax slab wise. You can further again press enter to view more details. If we enter on ledger, then you can view the details in ledger format. Whatever transaction and voucher entry you will do from this software, its effect is automatically made on GST returns. You will soon receive a video of GST returns in Marg software. So friends, in this way we saw the GST billing process in Marg software. Thanks for watching.